So 2 weeks into the challenge, ChatGPT is still beating the S&P 500. That's the headline, but it's getting a little murkier now. So if you're just joining us for the first time on this challenge, about 2 weeks ago, we started a challenge with ChatGPT to see if it could beat the S&P 500 by picking a portfolio of 5 stocks. And the 5 stocks it picked for us were EQT Corporation, Urban Outfitters, URBN, GPI, and a car dealer, MSFT, Microsoft, and J&J. And so you can see that over the last 5 days, things have changed a little bit. Stocks like Microsoft and J&J are rising. Urban Outfitters, which was a massive outperformer last week, up 18% on the week, is down this week. GPI continues to be a slight underperformer. So here you can see it all on the chart. That's Microsoft up 2.1% on the week, and we'll dive into why that was. The S&P 500 up 1.8% on the week. J&J up 1.3% on the week. GPI only slightly down. EQT down by 1%. And the biggest laggard, Urban Outfitters, down 3.5% on the week. But when we look at it over the course of the last 2 weeks, you can see that 3 out of the 5 stocks are up on the S&P 500, which is down over the last 2 weeks by 0.9%, but 2 of them are underperforming. So EQT is underperforming by 0.5% and GPI continues to underperform. So now we asked ChatGPT to conduct an analysis on each of the stocks, really based on performance over the last week. So we asked it to look at the fundamentals to see if anything has changed, technicals, macro context, or recent news to see what might impact the performance of these stocks going forward. So here we go. Not much has really changed with Urban Outfitters. It reported very strong Q1, which drove the outperformance from a stock perspective the week before. If you remember, it was up about 18% in that week when it reported earnings. It's repurchasing shares and did about $152 million of share repurchase during the quarter. It's trading well above its moving averages, which represents a bullish signal continuously. Positive analyst sentiment, so it's all good there. So we're going to keep Urban Outfitters in the portfolio. Let's check out EQT. So EQT is an underperformer this week. Not much new from a fundamentals perspective or new developments. There continues to be strong demand for energy driven by AI and data center use. So the macro context for this company is pretty good. So that one is staying in the portfolio. Now, from a bearish perspective on this one, there's a potential for volatility in natural gas prices. So even though from a long-term perspective, the growth in data centers and the use of power and AI is driving strong demand for its product, this is a 30-day challenge. We have to be concerned about what's going to happen over the next 30 days. And our natural gas price is going to change in a way that's going to continue to negatively impact the stock. So I'm going to put a question mark on that one and we'll come back to it in a second. Let's look at J&J. Let's see. Well, J&J is our second best performer right now, up 2.4% versus the S&P, which is down 0.9%. So it's outperforming the S&P by 3.3 percentage points. So the macro context still remains good for J&J. Strong technical performance right now. Current price is at 155.21, below its 52-week high of 169. So maybe some room to run there. Doesn't look like there's any significant news in the past couple of weeks for this one. It just continues to execute. That's what you'd expect out of J&J. Not much happening from one week to the next. Just a steady Eddie healthcare stock, and which is why it's a good one to have in any portfolio, whether it's a 30-day portfolio or long-term portfolio. So Microsoft is the next one. Microsoft was up 2.1% on the week. Its technical indicators look pretty good. It's trading above its 50 to 100-day moving averages currently. It's a key player in all AI and cloud computing areas and strategies. So not much new on this one. So we're probably going to keep this one in the portfolio. So far, we have a question mark on EQT because of the volatility in natural gas prices. So we need to check in on that. Now, GPI. GPI was the one that last week ChatGPT told us to kick out of the portfolio, but we were a little stubborn and we kept it in and we suffered for it. And it's down even more. So if you look at the chart here, it's down 4.7% over the last 2 weeks. It's the worst performer in the portfolio. If we would have taken it out of the portfolio, we would have had a higher performing portfolio. And let's actually compare it to the stock that ChatGPT asked us to add. So that stock was LPLA, and we're going to add it right here. So let's see. So check this out. So LPLA would have been up over the last 2 weeks by about 0.9%. GPI is down negative 0.47%. Let's see what LPLA would have done over the last week, because we would not have picked it 2 weeks ago, we would have picked it a week ago. So check that out. LPLA would have been up 3.9%. So we should have just listened to ChatGPT and kicked GPI out and added LPLA, and we would not have suffered this big gap that we suffered here. We would have been up 3.9% on that position versus down 0.5%. So maybe we should listen going forward to ChatGPT when it asks us to kick a stock out of the portfolio and then add another one in. All right, so with GPI, things continue to look decent from a long-term perspective, but not from a short-term perspective. Like we said in the last video, we talked about this business being in a space, the consumer discretionary space, in which within the macroeconomic context that we're in today, the likelihood that people are going out and just buying a ton of new cars isn't high. And so we need to be cautious about that. Although GPI does have a used car division and it showed really strong same-store sales in its last quarterly report. So this is a challenge that we have when we're investing for the short term versus the long term. If we're investing for the long term, we probably would not be asking this question. We probably keep GPI in the portfolio and continue to ride it up. But because this is a 30-day challenge, we have to be cautious about what we keep in the portfolio and for how long. Because we could have underperformers in the short term, even though they're great performers in the long term. So this stock continues to struggle with tariff implications, although this week, from a European perspective, the US government decided to postpone the imposition of tariffs on goods coming from Europe. So that's a net plus for the stock, even though it did not react well in this past week, being down 0.5% for the week. So we asked ChatGPT to re-rank all these stocks and tell us which one it thinks this week will be an underperformer going forward. And here's what it told us. So it said it thinks EQT Corporation is going to be an underperformer in the next 3 weeks. The main reason is natural gas prices have been very volatile, going up and down, which is why the stock was down this past week. Even though it was an overperformer in the week prior, it's an underperformer this week. The decline wasn't deep though, so maybe we don't kick it out of the portfolio, but it's definitely something to watch. Down 6.1%, while the S&P was up about 2% for the week. That's a big delta there. And guess what stock it asked us to add? What it told us to add last week. It says add LPLA holdings because it gives us additional diversification, adds a stock that's in the financial sector to our portfolio, strong recent price performance, which makes it a decent add. So this week, I think we're going to take ChatGPT's advice and we're going to add LPLA to the portfolio. Now, ChatGPT did not recommend that we remove GPI from the portfolio this week. So we're going to keep it in, but we're also going to add LPLA to the portfolio. I think we will take its advice and remove EQT from the portfolio. We'll still monitor it, but we'll remove it and see how things perform going forward. So would you take ChatGPT's advice in this case? LPLA is a financial services stock that adds diversification to the portfolio. Or would you just keep the original 5 that we started with and not make any modifications to the portfolio? We're going to keep watching all of this to see how they all perform. And then we can backtest to see which of our decisions made sense and which ones did not. And which one could we improve on and how we adjust prompts to make sure that we can find things out even earlier. If you want to see how ChatGPT picked those initial set of stocks, you can watch this video right here. If you enjoyed the video, like and subscribe, comment below, and I'll see you in the next one.